record it. Okay, so we'll share the recording.
Sure.
So
Sure.
I forgot to press the switch.
Okay.
I'm just
So you should have told that we have to switch on our video. So I would have been a better condition then.
next time you come, like, you know. but this video remains in the group only, so it doesn't go anywhere. Okay.
Yeah. Okay.
Because we'll share it, because so share it in the group, and in case of Poonam forgets, then just give a reminder. We need like tomorrow, yesterday's Q&A video, so she will post it. Okay. And then I forgot to switch it on. Okay, so now, okay, portfolio optimization equity. I checked the website niftyperatio.com. The color schemes given in the table is relative. That is, okay, what is red today might convert to green tomorrow. Yes, you can check the same. At the time when you shot the video, check the values 2018 October, December. Yes, that's true. And they were red in color, but now all those values are green. Yes, exactly how to understand this. Okay, and how to make decision based on this. Okay, beautiful. If you check the chart below between Nifty and PE value, there was a direct correlation between Nifty and PE. That is, when the PE is increasing, Nifty is also increasing. Yes, of course. But after April 21, there is a sharp crossover over the correlation has turned negative. Beautiful observation. Now, although the PE is low, market is almost at an all-time high. How to understand this? How to take action based on this? Okay. Beautiful question. Now, Kritika.
Yes.
So have you taken workshop?
No.
Okay, you have not taken workshop, right? Okay, fine. Because in workshop we go into very deep. Okay. So okay, fine. So I will make you understand. First thing is that what is PE? PE is, I think yours is the last question. Just a moment. Yeah, yours is the last question. Okay, take it. That's good. Just a moment. Okay, let me switch it off. So nobody can disturb me. What is happening? Yeah. Now you see PE. PE consists of two things. One is price, another is the earnings, right?
Okay.
So now, okay, let me share my whiteboard. Okay, everybody can see my whiteboard?
Yes.
Okay. Now, okay. Now, what is PE? PE consists of two things. One is your price, and another is your earnings. Okay, so this is called P/E. Okay, so there are two things. One is price, one is earnings, right? So when the price goes up, right? Suppose we have a PE today. Today we have a PE of say 20, right? Somewhere around 24 or 20 something, right? So let us consider price is suppose 200 and earnings is ₹10. Earnings per year is ₹10. Price is 200. So we have a PE of 20. Okay. So now what happens when the price goes up? Price goes up. So now this is the case one. Okay, this is the case one. Now second case, price is 300 and this is 10. Okay, we have 30. So that's what you said. You have observed that that is correct. Okay, from 20 it has gone up to 30 because price has gone up, right? So now next what happens? The third case you saw like there's a crossover. Crossover is this has gone up to say 400, but this earning has gone up to say 40. What is the P now?
10.
What is the P?
10.
10, right? Okay, got it. Now you see, because this earning has gone up substantially, that's why P is coming down. Understood? Clear? Earning has gone up. Price has also gone up. Price may go up. Price may come down. Okay. But since earnings has gone up, earnings have gone up substantially, PE has come down. Okay. So now Market is at the all-time high, all-time low. Like, when it is like this, market is always it is all-time high. This is also 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 all-time. This is also. Okay. All-time high is actually it's nonsense. It doesn't have any sense. It will be always all-time high. Today it is all-time high. After 10 years again it will be all-time high. After 20 years again it will be all-time high. Or it can be consistently all-time high. Main thing is that, do you have proper earnings? Okay. So you must have a value, right? So you must, why you are buying a company? Buying stocks means you are buying a company. Why you buy a company? Why you buy a company? Tell me. Why you should buy a business?
Because we
I have
see
a
that
business that is not, it is giving all the losses and going forward also, it will continuously, it will be giving losses. Will you buy that business?
Because we see a scope that the earnings can increase in future.
Profit, it makes profit, right? So we
Correct.
do businesses. I am a business. You are into business, or you are into job, or what?
Business.
You are into business, right? So why you do business? You do business because creating profit, right? So I do business because I want to make money. Money means what? Profit. After paying everybody, right? But the thing is that my sales is low and I pay everybody, and sorry, whatever is the sales, but I pay everybody and nothing is left. So I will, after some time, I will not survive. Nobody wants to own such kind of business. Everybody wants to own business that gives us substantial income ultimately. Okay. Or somebody has someone has a huge asset base, right? So there are different methods. Okay, there are complicated methods, but this is the easiest method and this works. Okay. In fact, general people, everybody, like people, you and me, we can understand this method. There are other valuation processes, other valuation methods which are very complex. We don't have to understand that much. Without understanding that, because ultimately we are not investing in shares, ultimately we are investing in mutual funds, but we are taking decision based on this.
Sir, actually, what I wanted to ask is that, like you said, that when it is very green, right, which means that market is going down or P ratio is going down, and that is the best time that we can get into an equity mutual fund, right? And as it turned into light green and then very red, it means that the market is at an high, and from there is a possibility that the market will go down there. That's why we should shift from equity to debt now. Right.
Exactly.
But what I want to ask is, let's say if you observe October 2018 to December, right? Those values were in red. So at that moment of time, when I was in December, let's say October 2018, then at that time I would have shifted my portfolio from equity to debt. But right now, if I see that it has turned green, so the point that I am not able to understand it, since the color scheme is relative. So whatever decision I take today, it might prove wrong when I go in future and then see, in the hindsight, that what I had done in the past.
Okay, so now let me ask you. So what you should do then?
And that is what my question is. Based on today's whatever the color scheme it is showing as of today, I have to take the action based on today, or is it like I have to analyze everything? Because right now, if you see, the entire chart looks green on the above. So what it is said that if you hold the equity mutual fund for a long term, then it makes sense. Obviously, if we are taking the decision for a short time frame of time, then I can understand that this color scheme के हिसाब से आप decision लो और आप switching करो. But अगर मैं long time के लिए equity portfolio hold कर रही हूँ, so it is said that it will give you returns. So that is what I'm not trying to understand.
You are asking this question. No. You are asking this question because you are yet to finish that course, right? So we do not have that approach. That's why I asked you. So you came to this course, right? Okay. That's why you see, we do not have that approach. Our approach is based on the goals, right? Based on the goals, and in fact, it's very necessary, right? To have a if possible, take the workshop. Next week we have workshop. Like next week means this Saturday we have workshop, right? Saturday, Sunday. Now you see, this approach is not that. Approach is equity. We are not holding equity. We are buying mutual funds for some goals, and we will be keep on changing that. Suppose today, what is that? Suppose today you have money, right? So let us assume today what will you buy? So this is the median, right? So in fact, we are changing our videos also, right? We'll have to we are updating the videos, right? So normally we use this chart because I created that videos long time back. So I was actually we are doing that because what happens, let me tell you. So when I started, in fact, I used to get a lot of students, huge number of students. So every kind of students used to come. So they find it very difficult to understand all these quartiles, etc., right? So that's why I was, because that color everybody used to understand. So I resorted to colors only. But what happens eventually, what I felt, what we have decided that we'll be started taking only slightly more educated mass, more educated people, because we have found from our experience, so such kind of people gets more benefit. Okay, in fact, others, they do not get much benefit. So now in workshop we use this chart. Actually, this is the, here we are giving color code. So color code is basically for those who have who gets confused with statistics and all. Okay, so now actually we use this, and of course we are going to update the video with this chart only. Now I am working on it. Okay, I'm in fact now writing the booklet. I'm working on it. Now this is the median. Median is around 20.50. So this median, right? So you can see PE remains around that median.
Correct.
Now Nifty, you see it was 1696, but those people who invested in 1990s, 2000 at 1696, they could not make any money because of time factor, right? For 5-6 years, they were making negative returns. Okay. Same thing happens here. 28.9. Everybody, the people who were here, this is 2008. Those who bought at 2008 for around 6-7 years, they couldn't make any money, right? So even after that, they have started making money. But if you really compound it from 2008 to 2015, their returns are minuscule. That's why I showed you, right? So do people really make very less money? So what to do? We'll have to follow this strategy. So how to follow this strategy? Forget long-term, short-term. Whatever market says, we will do that. So now what do you think? Looking at this chart. So this is the upper quartile, this is the lower quartile. Normally we do take decisions within this level only. Here it is gambling, here it is gambling. Okay. Understood? This is the extreme low. This is the extreme high.
So if you see, yes, sir. So if you see that currently the value of P, which is 21.15, is near about the median only, 20.5, correct? So abhi jaise aapne bola ki obviously it will hover around the median only, correct? And that is what it is said ki short term में थोड़ा सा volatility हो सकती है, but longer term में it definitely comes back to the mean reversion, right? Which is the median, right? So at this point, what should be my strategy? Should I get into an equity fund right now, or should I start switching to a debt fund? Because अगर अभी ऐसा है, अभी अपन जो चार्ट देख रहे हैं सर, ये अपन को दिख रहा है because अपन लोग पास्ट का पूरा देख के अभी अपन को दिख रहा है कि अच्छा यहाँ पे लिया होता अपन ने, यहाँ पे किया होता तो ऐसा सेंस बनता. Now it makes sense. But right now, if I have to take the decision, then what should I do? I mean, should I buy a equity mutual fund, or should I buy a debt mutual fund, or what should be my strategy as of now? Let's say if I am looking for a retirement के goal के लिए मैं देख रही हूँ, which is like 25 years from now.
Okay, so now because you have not gone to the mutual fund section, am I right?
Yes, I haven't. But I have a pretty fair idea of what mutual fund is, and I have a good idea of about markets and everything.
Okay. So now what do you think? What is the risk level? It's a high, moderate, or low? Right I now, think, looking at a P. No, don't think what market says.
Okay, so I don't have to look at Nifty. I have to just look at P. That is what you're asking.
Exactly.
Okay, so if I look at P, then I think it is at a moderate level only. Moderate because level, it is hovering, because it is hovering around median.
Awesome, right? It's a moderate level. Got it, right? So when it's a moderate level, so now when the market risk becomes high, we play less risky assets. When the market is low means not market. Market is not important. Okay, market will keep on going up and up and up and up and up. Okay, of course, like this, it's not consistently up, right? It is the
Yes.
important is valuation. So P is a valuation. There are a lot of other valuations, but P is the easiest way and is a very effective, very powerful valuation. Now when the market risk is low, we become aggressive. We take risk.
Okay.
Understood? So now it is moderate. So moderate means that market has a whatever the natural risk associated with the market, right? That is there. So now when I say market risk is moderate, it is just that normal risk associated with the market, right? So when I say market, then what kind of what comes to your mind? When I say today market is high, today market is low. So when I say market, what comes to your mind? I'm saying market is up. Yeah, tell me.
So market is up means most of the companies are going up. Nifty is basically going up.
Not most of the companies. Market is up today. Market is up 2%. What is up 2%? Because you are in the market, that's why I'm asking you. Okay. Normally, I do not ask such kind of questions.
Yes, relative to yesterday. Like
what
yesterday.
What is up? What is up?
Valuation is up basically.
Valuation? No. What is up? What do you measure?
The index basically.
Index, right? Yes, exactly. Correct. Index, right? Nifty.
Yes. Okay. Yes, exactly. Nifty is up.
It's
correct.
So it is a moderate. So it is moderate. That means it is a time to invest probably in Nifty or large cap stocks. Nifty is very, very conservative, right? If you want to become slightly aggressive, you can go for large cap stocks. Those who are conservative, you can go for, in fact, index. Normally at this, what we suggest, at the median, you go for large cap stocks, buy large cap mutual funds. Okay. Now, suppose it goes up and up and up from 20.
But shouldn't it be, sir, balanced between debt and equity since it is moderate? So we do not know that what can happen. So just isn't it better that we balance between equity and debt because abhi yahan se upar bhi ja sakta hai, yahan se niche bhi ja sakta hai.
Okay, so then in that case you don't have to come to this class. Since we have paid and joined this course, so you cannot play this game. You should not play this game. This is for somebody who doesn't have understanding. Who doesn't have understanding, they will buy this also, they will buy that also, they will buy that also. Okay. When you have understanding, right, you should not do that. Now tell me, suppose us 20.5, tomorrow it goes to 25.
Median?
Median, I mean not median, PE.
Okay.
Median to 20.5 may rahega. Median will remain 20.5.
Right.
PE goes up to 25. So what do you think? The risk is high or low?
The risk will be high because it will, when it goes up, so P is going up means that it will try to come back to its median.
Exactly. That's all the probability is very high. Okay, 25 means, let me tell you, since you have like knowledge, that's why I am telling you. When it will reach 25, statistically, there are 75%. Okay, it's an upper quartile. Upper quartile means at the top 75, right?
Correct.
So 75% chance that it will come down. Okay. So now in that case, what will you do with your portfolio? You know it already. What will you do with your portfolio?
I'll switch to debt.
Exactly. That's it.
Correct.
Right? Okay. Now let us assume. Now tomorrow, now you are having a index fund, right? You can say it can go up, it can come down. Say it goes down. Okay, it comes down to 15. So you'll having a lot of losses. Yes or no? If it goes down to 15, suppose tomorrow it goes to 17 or 15, say 15, it goes down to 15. You'll have losses. You'll have losses, definitely, right? You'll have losses. Today, if you buy a large cap fund.
If we are into equity, then we'll have losses.
Yeah, right? You have losses, right? So now it has come down to 15. Now what will you do?
Then I should get aggressive and get into small caps and mid caps.
That's it. You know it.
Okay. So basically, what I just observed is that in the chart also there is a color scheme. So, what I can say, like you were saying, that 75% of the quartile. So, what yellow color hai, and as we go up, the color is changing, which means that ki wo levels probably उन्होंने वहाँ पे दिए हुए हैं कि अगर ये level पे है, that is what it is saying, that it is becoming riskier and riskier. Correct?
Exactly.
Okay. Okay. So it's. Okay, but sir, just wanted to ask that what is the that up till now, if you see before, like this red line, which is the Nifty, and blue line, which is P, so there was a direct correlation between the two. But after October 21, if you say that blue line is coming down and red Nifty is going high, so that is where I meant that you are correct. You are correct in saying that every time it will be all time high. So हर बार पे वो all time high होता है. But at the current level, I am talking about that it is Nifty, it is at 17,718, right? And P is at 21.15. Why is it happening? Like you mentioned earlier, जैसे 40 पे चला गया, तो earnings basically बढ़ गई हैं, इसके लिए वो कम हो गया है. That is what. प्राइस तो बढ़ ही रहा है, जैसे प्राइस बढ़ रहा था निफ्टी का, और अर्निंग्स भी अच्छा खासा बढ़ गया है, इसकी वजह से वो पी रेशियो हैज कम डाउन, राइट?
Okay. So now let me tell you, since I feel like you have a lot of understanding about the market. Okay. Next level क्या study करना है? That is not in the syllabus, right? But since you have like proper understanding, थोड़ा सा advanced level understanding है. That's why I am telling you. Now you see, now next level analysis what? Next level analysis is what is the quality of earnings? ठीक है? अभी क्या suddenly अभी just now you are also surprised, अरे निफ्टी इतना भर गया, अभी ये इतना कम हो गया, इसका मतलब अर्निंग्स इतना भर गया, ठीक है? अभी एनालिस्ट लोग क्या देखते हैं? व्हाट द एनालिस्ट सी? एनालिस्ट विल सी नाउ what is the quality of earnings. Quality of earnings is basically they are making profit, or it is because of cost cutting. Is it because of inflation they have increased the price, because of that profit is happening, or is it really actually there is a lot of demand happening? Okay, so this is the next level study. Okay, normally we do not discuss these things here, like at this stage, but since you have like थोड़ा सा advanced knowledge मेरे को लगा है, तो इसलिए I am saying now if you want to have a second level of study, so you'll have to look at that. So how is the quality of earning? That is called quality of earning. It's a good quality of earning, or it's like जैसे ही कुछ somehow like अरे बढ़ाओ, somehow profit increase करो. Okay, so this is the job of analyst. Now the analyst will go meet the management, read here and there, and then they will come to a conclusion that this kind of profit increase is sustainable, not sustainable, we do not know. Okay, because we are outside that industry. So that's why we focus only on mutual funds. So we buy mutual funds, and particularly again, we, as you have said correctly, we buy equity में large cap, mid cap, small cap. We play with that only, nothing else, and that's more than enough to make a lot of money.
But sir, wouldn't it make sense that if we get into multi-cap और so multi-cap में मेरे को एक ही लेना पड़ेगा let's say, और उसी में ये सारी चीजें आ जाएंगी, small cap, they'll do the switching and they understand, because fund manager, he'll understand, right? He understands all this analysis and everything. I might not be a good person to do that. So I mean, so wouldn't it be better if I just buy a multi-cap, flexi-cap?
If you feel like your fund manager is expert enough and he thinks that way and he takes that type of decision, so then you can leave it to him. Okay. So there is no you can leave it to him. So okay, fine. But are you sure so he will do it like this?
I'm not sure. I mean, that is what I. So see, that's a different topic, sir. I don't believe into active mutual funds. I'm more towards passive mutual funds, because I understand that nobody can give a consistent performance for a long period of time. So it is always better that we have the control in our hands, and the better we are able to do, the better control I'll have. That is what.
Exactly.
So
that's why this course is.
Okay.
And let me tell you, I have met so many fund managers, with due respect. They are very highly educated people, but yeah, a lot of them are real idiots. I trained a lot of them, so yeah, this is how it is. It's yeah.
Okay. Got it. Yeah. Thanks.
Okay, beautiful, awesome. Go through the entire course. Okay, then you will get the holistic view. How to go, how to do everything. Okay?
Sure, I'll do that.
Okay.
Yeah. Okay. Thank you.
Welcome. Okay, so next, anybody? Okay, who raised the hand? Jeevan Kishore. Yes. Jeevan Kishore, can you? Yes, sir. Can you just switch on your this thing? Possible?
Okay. Not
possible? It's okay if it is not possible.
Anyhow, I'm going to share my screen, so it will be better.
Okay.
I can.
Okay, just a moment. Just a moment. Yeah.
I can share my screen. Oh, one second. Where I can desktop. Okay. One second, I'm sharing the screen. Actually, my question in the meanwhile, I will explain my question. So my question is like, I tried to calculate the PPF, what do you say, return, like how we calculate for, what do you say, others like the LIC and these kind of things, right? So how much return it is getting, I try to calculate.
Okay,
So,
that's great. Yeah, that's great. In fact, I think for the first time you are somebody is doing this. Yeah. Now,
yeah,
what is the return you are getting? Yeah.
Yeah, so if you are able to see my screen,
Yeah.
here for 12,500, so when I calculate the maturity value after 15 years, it is 43 lakhs. But if you do extension, then it is 1 crore 61 lakhs. Okay, so what I have tried. Let me share my sheet. Oh, no, short. Google Sheet. So I have tried to do this one.
You can do here also somewhere on the side.
Yeah, here I have done this. So when I calculated this, if I see that it is just showing 7.88%.
Normally, yeah.
Is it correct? Because VPF is the kind of fund where you will get the compound interest and all. If you keep ideal that money which you have got after 15-20 years, if you keep it, generally it should grow multifold. Like if you see just 40-50 lakhs became what do you say, almost 1.5 crore maturity value, right? So it was compounded, but how come still it is showing this interest, 7.88 interest?
Yeah, normally this is like this. It is somewhere around 8% only, 8% plus minus. Normally it is, and this is considered to be a risk-free return, right? And you also get tax benefits. So that way, so this is considered to be a good return. But of course, when you take risk and when you follow our SOPs, you have done the workshop, right? Am I right?
Yes.
Yeah, you have done that also, right? So as you understand, right? So when you do follow our SOPs over a longer period of time, definitely you get much more. But when you are depending on government schemes giving 8% is huge. So that's why, that's why we that's why I said we create. It's always better you create your own pension fund. So now you make it 12%, and then you consider it. Even if you make 12%, right? So even it will be much better. So that's why my suggestion is, so how many years left till your retirement?
Actually, I have almost 25 years left.
Oh my God.
Yeah.
25 years, right? So,
yeah.
Okay, so huge. So 35 years old. I know, pretty young.
No. Actually, I am calculating 55 as retirement. I am 30 years old.
Okay, 30. So you are planning for early retirement, right?
Yeah.
My suggestion is whatever you are putting in PPF, whatever is the minimum requirement, that you put there. Okay, because you have age, and you just don't be greedy. Whatever you have learned here, just stick to that SOP, right? So you will see, you'll be able to now. When are you planning to retire?
55 years.
55 years, right? So probably there's all the probability you'll be able to retire at my age.
Okay.
Okay, I'm 50 plus, so probably you'll be able to retire or might be earlier also. Got it?
Okay.
So now don't try to put many things like, in that all the government schemes. Whatever is the minimum necessary that you put, rest of the things like, you just follow our SOP. Okay.
Okay.
So you follow, have you created your plan?
Yes, I have created the plan as well.
Okay, for retirement ke liye, what is the kind of return you are expecting? Kitna return pakad ke liya, means how much return you have considered for retirement plan?
Actually, I have considered 10%. That is enough. 10% to 12% max.
Achha. ठीक है, you are very conservative. In fact, ठीक है, अच्छा है. Go conservative way. And where? So one is PPF. Another thing, what are the other things that you are putting your money for your retirement?
Actually, NPS, PPF, I have invested, and another goals all are into equity only. These two are for retirement. Actually, I kept because it is giving.
Okay. So this NPS and PPF are like enough to meet your
PF
retirement
also,
purpose.
PF also there, right? PF also there.
PF also there. Huh? So that is enough for your retirement, right?
Yeah. Actually, I have added all the other items which is there for my retirement. So I feel those are more than enough.
Okay, that's fine. Go like and what will you do after early retirement? What will you do? Where do you work?
I just want relax and watch movies. Nothing else.
You'll get bored. Only thing is that what happens, like, let me tell you, like, because I have planned many, okay, and people like, they normally do retirement planning. So everybody thinks, okay, I want to do retirement, okay. So suddenly you discover that you can retire tomorrow, right? I think you were there, one gentleman who worked in public sector company, right?
Correct.
So he was suddenly he discovered that okay, he can retire tomorrow. So now what will happen? So from next day onwards, you will start enjoying your work more. Got it? Because there is no stress. Okay, something okay, I'll just write resignation. Okay.
Yeah.
So when you are in that state, you start performing well, you start enjoying, and then you go to office for fun. And when you go to office with fun and all, then you end up working more, and you end up creating more results. That's what happens actually. So it's always it's a very ironic. So when you are like working hard for money, then it doesn't give results. And when you work for fun, then it gives the results, right? So that happens. Got it?
Yeah.
So probably, but it's okay. Like you must try to retire early, okay? Because that's stress. Once you know, okay, so I'm retiring at this early, and once you know that I have that corpus that I can give resignation, throw resignation today, right? So after that, you start feeling very, very relaxed. That's the actual happy thing money wala happens, right?
Yeah.
So nothing will happen. Okay, if the boss tells me something, I'll throw resignation there. Okay, I was also an employee, so I know that. Okay.
Yeah. Thank you.
Okay. Anything else, Jivan?
No, actually, I feel I feel it will be calculated, but it will get more. But I'm just surprised it is returning the same result which they are almost giving now, 7%.
It is that only. That's only right. 8% because I knew it, like somewhere around plus minus 8% only.
So CAGR percentage is different than the actual absolute.
No. We discussed that in the CPC itself.
Yeah.
All the IRR, XIRR, rate, scientific, all the scientific methods, they give CAGR only. It's a CAGR only. That's not ultimate return. Whatever method you are using XIRR, use IRR method, you will get the same result. Use rate method in 2 stage, right? You will get the same result, same 8% result you will get.
I mean, so my question is like, suppose if you consider like invest 1 lakh, generally 8% in the sense in bank and all, they will give the interest rate that is very low, right? So like that, this one also very low. Then in that case.
Yeah, but it is secured. It is like guaranteed, right? If you want to play, that's why I said like you can, if you want, you can reduce that amount and you can start investing like using our SOP. in mix of equities, dates, like, keep on switching. So that way you can make a lot of returns. In fact, you say once the market comes down, after that, when you will shift, then after that, when the market will go down, when the next cycle will be completed, you will be making a lot of returns, probably 30, 40 returns, 40% returns. You never know. What happens, most of the people, including all these big fund managers also, they get scared. They get scared, they become very conservative. Pata nahi kya hoga. Why pata nahi kya hoga? Because they do not have the understanding about valuations. That's it. Very simple. Sometimes they have the understanding of valuation, but they do not have conviction. When they do not have convictions, they start behaving like laymen. That's what happens. Let me tell you, this is the truth. This is what happens. Okay. So since if you have conviction, okay, fine, market is coming down. Okay, now I'll become aggressive. Become aggressive when the next cycle, because it will turn. We know. PE, it is not like from tomorrow, until and unless somebody bombs our country, that is not going to happen, right? So if that happens, that's a different story. But otherwise, definitely it will turn around. Definitely it will turn around. And particularly we are a growing economy. So since we are a growing economy, it will definitely turn around. Understood? Of course, it depends on all the situations, like how it is being managed. Based on that, speeds becomes plus and minus. Okay. Sometimes if it is managed well, speed will be higher, and then coming down will be lower. But we always love when the market comes down. Understood, Kishore? I think you got disconnected or something. Okay. You got disconnected, I believe. You're muted again. Okay, I cannot. You have no, it becomes automatically. I don't know why. Just a moment. No? Unmute them. Okay, allow participants to unmute themselves. Okay, okay. I have allowed participants to unmute, right? So you can unmute. So normally what happens? Okay, you can unmute yourself.
Thank you. Yeah, I understand. Yeah, correct.
Understand?
Yes.
Okay. Yes. Okay, chalo then. Okay, so next is Prabhat Ranjan. Yes, please unmute yourself, Prabhat Ranjan. Can you switch on your video?
Yep.
Yes, sir. Please come in so that we can discuss. Yeah.
I have a very quick question that we are talking about that portfolio optimization, and on the basis of that P ratio, how frequently we should be moving from equity to debt? Like I'm seeing this month it is 20, and if I'm seeing that there could be a risk, should I keep on moving my whole corpus to another one?
You should, but you will not get a chance. I pray God that we get that chance very frequently. Okay. Now you see like how many years I waited, ye kitna hai? Ye 2017, right? So somewhere around from 2017 say in between we got a chance. Okay, so very quickly we made a lot of money, in fact. Then after that, basically from here to here, kitna saal hai? From here to here actually, 17 to 5 years. So 5 years I was out of equity market. That's fine. So you will not get a chance. Getting it? You see, बहुत time लेता है. Suppose यहाँ से अभी कितना दिन हो गया? यहाँ से यहाँ ये what is this? This is ये कौन सा तारीख है? This is 15 March. March से today it is September. March, April, May, June, July, August, September. 5-6 months. 6 months it has been around that level only. So you will not get chance. Even if you want to do frequently, you will not get chance. Whenever you get chance, you do not miss it. Immediately switch. Because this is the only mantra of making superior returns.
Okay. Though I couldn't understand it fully. You are saying that we should be moving the whole corpus to another one once.
You'll have to move. Now you have you done workshop?
No, sir. I missed this week.
Missed please, this time, like please.
Sure,
this Saturday, Sunday, right?
Yes,
it will be crystal clear. Okay. So yes, Saturday, Sunday, hai na? Wednesday, Thursday, Friday, Saturday, Sunday, right? This Saturday, Sunday, do not miss it. Please do not miss it. Okay?
For sure, sir.
ये पूरा clear हो जाएगा. After that, there is a confusion. Then you come again. Like next Wednesday, you come again. So जो भी छोटा मोटा confusion होगा मैं clear कर दूँगा.
Thank you. Thank you so much, sir.
Okay, welcome. Okay. Any other question? KB? Yes, sir.
Utpal sir,
Can
good
you
evening.
switch
Can you
on
hear
your
me?
switch on your this thing TV? TV means yeah, TV, okay, whatever. Yes, sir. Just a moment. I am taking you in at Spotlight. Yes, sir. Yes, sir. Tell me.
Yeah, so I'm actually a self-starter. Just last Sunday we joined this one, and to be honest, I'm at level 1, not yet gone to that level. I want to be very transparent. The thing is that I have around 10 more years of active service, and my investment portfolios are more on these LIC and basically on Provident Fund. Yeah, VPF and Provident Fund. Yeah. Heavily on an LIC, the orthodox things and all the stuff. I'm trying to venture myself into mutual fund. What would be the best option? Keeping okay. Now also one thing on the retirement perspective, I don't have much planning, to be honest, and I have to invested something on my child's education, which is kind of covered. But basically, I want to try to last 10 years try to make amends and see what best I can do. What would be your advice? I will not hold you accountable for any reason for sure, but what do you suggest looking at where I am?
Okay, so you have taken workshop?
No? Yeah, I have taken.
You have taken workshop. Okay, so please join workshop Saturday, Sunday. Okay. Sure. So what will happen since you have of course, because you are in the first level only. So to understand the discussion, so you must have you must have certain levels you'll have to cross. So workshop is a what? Workshop is a bridge. After the workshop, what we'll do, we will try to get the most important part of the things, right? The entire subject that will cover very thoroughly and very deep. Okay. So normally my way of training is I keep on asking questions, right? And I do believe the entire universe is here. Only thing is we need somebody who can just take it out. Okay. So you saw that I forgot the name. Okay, I cannot remember names. That's my problem. Like that lady came.
The first lady.
Yeah, I was just asking questions, right? She was answering herself. So this is true for everybody. Okay, so then what happens? So it is already there. Okay, so there's another way is putting the things in the brain. Yeah, sometimes you need to put the brain. Okay, but otherwise the entire universe is here. Whatever is the subject, entire universe remains here. So we need somebody to take it out. So then okay, it was already there. I knew it already. Okay, so this is what will happen. This is what happens in the workshop. Right? In a videos, what happens? Like I tell, okay, ye hai, wo hai. So it is put in. Okay, workshop, I take it out. So I will take it out from your brain. Okay, it is already there inside. So it's very easy things. Okay, so please attend this. Then after that, next Wednesday you come here. Whatever is this thing, and don't get disappointed if you do not understand this workshop, because you have just joined and you yourself has said you have just gone through first session only. Okay, so that's why don't get disappointed. Probably once you finish it completely, or probably if you may need to or you may want to repeat it next workshop also. Okay, but just finish that course. Okay, so you will get the answer, don't worry. Okay, at least you will know. So I cannot guarantee, okay, so you'll be able to do it or not, but at least you will know the road and what is expected. Okay, what you can expect, what is the realistic, everything will come to know. So it will be like crystal clear in front of you. Don't worry.
So, sir, do you think mutual fund is a better instrument for now? Hearing my portfolio to start up with, on the I tried myself using my bank apps and all the stuff, but what would be a better option instead of going an equity based mutual fund or a debt based? I'm not to that matured enough yet, to be honest. But
so that's right. For that, you see, there is no one mutual fund. I told you, right? There is no one mutual fund. You have seen my conversation with that lady, right?
Yes.
You have seen that.
Switch over to other.
So now you could realize she was also telling me, "Yahan ye shift karunga, yahan ye shift karunga, yahan ye shift karunga." Okay. So now because she has been into market, it looks like. So that's why she could understand it very quickly, right? So don't worry, you will also understand it, right?
And so reason. The reason वो Nifty का जो दिखा रहा था, the reason is she was talking about equity mutual fund. Yeah. Okay. If it okay. So अगर डेप्थ के लिए then we have a different.
हाँ. अभी क्या है, अभी जब समझ में आता है तो हम लोग खेलते हैं, समझ में नहीं आता है तो थोड़ा थोड़ा सब कुछ ले लेते हैं.
Got it. ठीक है. Thank you.
यही होता है.
Thank you. Thank you.
Yeah. So please do not miss workshop. Please come to the workshop. Okay. Otherwise वो फिर postpone होता जाएगा. फिर बाद में दिक्कत हो सकता है. ठीक है ना?
Workshop is in the evening, right?
Workshop is from 6 to 10, Saturday and Sunday. ये तो fourth Saturday है ऐसे भी. I think this is fourth Saturday, right? हाँ. तो बंद ही होगा. So where do you work? May I know?
I'm into IT sector, sir.
Okay, you are IT. Okay, we have got a lot of IT. I think now highest number is IT engineers. Highest number. Okay. So anyway, and all the IT engineers are very good in finance. Huh? That's what I have found. Not only that, when I was working then also, like I used to recruit a lot of engineer plus MBA. So now here also I have found they can understand very well, very quickly. So don't worry, you will understand. If you are in IT, you will understand. Okay?
I'll try. Thank you, sir.
Okay, chalo then.
So, thank you.
Pradipta Kumar Sahu.
Yes, sir.
Hello, how are you going? How are you doing?
Very fine, sir. Good evening.
Good evening.
Am I visible? Am I actually audible?
Yeah, I can hear you.
So first of all, thank you, sir. Actually, by attending your courses and specifically your this workshop, this is really very powerful workshop.
Thank
so
you.
basically, I am a professional. I am an engineer,
Oh.
but I can say I have only 10% finance knowledge. So now
you have a lot of percentage, right?
I feel so. And really,
Definitely. At least I can tell you, you are better than your advisor. If I don't know whether if you have been using some advisor, I am 100% sure you are better. You are much better than your advisor. Am I right?
Exactly. Because actually, I had started my this investing in mutual funds since actually in 2017. So at that time as well, I was taking the help of one advisor. Basically, was a advisor from NJ. So all my portfolios was created from NJ. Okay? So there actually I was investing, and they have diversified the portfolio, and you can say there are 14, 15 portfolios are there. So I have invested in SIP and also some lump sum also. Okay. So after going through this session, what I did, I actually summarized everything, and I actually made a Excel sheet. And to know actually even at that time it was not in my knowledge that there is some stars are there. You have to rated star rated.
They will never do stars because you know why? Because most of the time all the high star and 5-star, 4-star they give very less commission. So they will always suggest you those funds where there is no star because they pay very high commission.
Exactly. So I was at that time I was 100% dependent on the advisor. So just I was paying monthly, and whatever he wants to do, I was doing. So when I got the knowledge, actually I compiled all the things. If you will allow me, just I can share my screen.
No, please go ahead.
One minute. Is it visible now?
Yeah, we can see it.
So actually, these are the mutual fund name and SIP. I think it is around 18 funds are there. Okay. So actually, I was just seeing the stars. These are the stars, actually the fonts from your this knowledge I got these things. This is blue chip, this is the 5-star, but I found that lot of fonts which are unrated. These are the unrated fonts. These 4 four star, then 2-star, 4-star, 2-star, single star, unrated, and all these things. So, if I'll say the summary, actually, this is the return actually 9.15%. This is annual return, average return.
Okay.
But the thing is, few SIPs, they are actually giving me this annual return. You see here, some SIP they are giving negative. Current situation, this is the negative annual return, is minus 4.7%, and there are some minus 2% like this. And some of the SIP they are giving good returns, just like SBI small cap. This is actually 29% it is giving, but this is small cap, and all are regular. There is no direct fund actually. All are regular. And absolute return, this is 72% absolute return. But my question is now, here actually Tata Digital India, actually recently I have invested here. There is some long term and SIP is going on here. I was started in December 2021. So this is the situation now. Actually, this is annual return is minus 22%, and absolute return is minus. This is going in minus. So weighted average is okay 9.15%, but some of the funds it is negative. My question is, when I approach to that advisor to just let me stop this negative funds. Now what he is suggesting? He is suggesting you, because you are just purchasing the units in low NAV. So you will get more return if this will come in a positive sense. So please don't stop this. But when I saw this is unrated, the star rating is also, there is no, it is not rated also.
Exactly.
And I thought, let me stop it. But I am confused. Should I stop it, or I should? Because as he is advising, you are now this NAV is very less, so you are getting more units, and when this will be in positive side, and your learning will be more.
This is a very nonsense logic. With that nonsense, baseless logic, they have been selling all these SIPs. Okay. So now you see, this doesn't matter. Ultimately, it's your money, right? So money comes down, money becomes smaller, money goes up, money becomes higher, right? Bigger. Okay. So now whether it is okay, we are not interested in buying that entire Reliance company. Okay. Tomorrow, if you say, no, okay, don't do it, you will be able to buy entire Reliance. Okay, this is the most dangerous thing to happen. If you become the only owner of the entire Reliance and everybody has gone out, that is the most dangerous thing to happen. Okay. So now, do not just listen to all this nonsense thing. Because if you do the calculation, okay, this is a complete baseless calculation. Okay, fine, okay, you will be okay, fine. What does it make difference? If I buy like so much of units, what does it make? Ultimately, it is if it is 100 rupees, it's 100 rupees only. When it will go up, then 100 rupees will go up, and when I'm investing, it's 100 rupees only. Yeah. Okay. So 100 rupees is not going to, at the same level, 100 rupees is not going to become 200 rupees. Never. This 100 rupees is 100 rupees. Okay. This is a complete nonsense, illogical advice they give, logic they give, right? So now, please follow our SOP. Consider that everything. And you have created your plan. Have you created your plan?
I have created my plan, but this is not actually, now I cannot show you, because the thing is, I am just refining it.
Got it. Because your investments are so diverse, and I am pretty sure there are a lot of overlapping. So you do not need, probably, okay, you do one thing. Let me tell you, sir. What you do, you just focus on, now, of course, there are a few things already you have marked that you are going to sell off, or you are going to discontinue. Okay, that's a good thing. Okay, so now at the most you will be needing 4 or 5 mutual funds. You do not need more than that. Yeah. Right? At the most, that is the maximum size. Right? So now what you do, you just fresh mind, you just forget that you have some mutual fund. Forget that. Yeah. You complete your planning as we have discussed in the workshop. Complete your planning. So in that planning, as you go ahead, then you take a fresh decision. Okay, for this goal, this is the what mutual fund I should buy. Don't think about this one. Take decision there. Okay, for this, probably you will be backing, we discussed a lot of mutual funds, right? So like, probably Canada Robeco, probably Axis Blue Chip. We have got Axis Blue Chip, right? Or probably Quant, like, whatever is the name, cannot remember. Okay. And if it is a debt fund, so, like, a few debt fund we saw, some 5-star good debt funds, right? Depending on your duration and all. Okay. So take a fresh call, list out all of them. Okay. And if there is a common, keep them, otherwise sell off everything.
Okay.
Because you know yourself, these are all dragging your money down.
Right.
If not happening today, tomorrow it will happen definitely.
Exactly.
Consolidate it. That's why, like, just go follow the plan, do fresh decision making. Then after that, forget everything. Like, you just take, it may take some time, 1 month or 2 months, it may take. Consolidate everything, shift everything to that. So then you will be in real control. Do not listen to all these guys. Okay. We do not blame them. Okay. Why we do not blame them? We cannot blame them also, because the way they are trained, that's what they sell. And now suppose if I'm a mutual fund manager, okay, I'll never say, okay, mera fund mein star nahi hai. I'll never say. I will tell only the good things, and I'll train them and I'll sell them. Okay, go and sell. Okay, so whatever logic I know, I will give them such that they can narrate that to the clients. Okay, so now so you should not be dependent on their advice. And definitely this is not a good advice, right? You can see it yourself. Okay, is this? It's just making commissions.
Yeah. The thing is actually, even another question is here.
Yeah.
This is SBI small cap. This is actually giving good return now. But as per our this P ratio, the current P ratio, we should actually opt this large cap in equity.
Exactly.
Yeah.
So now this is giving good return. You just harvest it, book that return.
So it should be advisable to this sell it, because it's giving 29% annual return and 72% absolute return.
Okay, so now you see, like, suppose market comes down, because now it is a 50-50 chance. Am I right?
Right.
Now it is the average, so 50-50 chance, 50% chances it goes up, 50% chances it can come down. Okay. If it goes up, then definitely this will give you another 30% return. I know that.
Yeah, right.
Okay. But that is a gambling, right?
Yeah.
Okay.
Fall, then will be nowhere then.
Then if it falls, then it will take away your 30%, not 30%, only 40-50%. जो भी return था वो भी लेके जाएगा और ये negative हो जाएगा.
Okay.
Okay, so that's a gambling. So now the best thing is that now it is moderate. So now we will invest in, now you have already made 30% return, right? So now put the money in the large cap. Okay, keep it there. If it comes down, large cap will not come down that much. Then you go back. If it comes down, then you go back. Okay, but the thing is, no, I want to remain aggressive. A lot of people, they love playing aggressive. Then it's a different story. Then it is your choice. Okay, but best thing is that, let me tell you, best thing is that do not take this approach. You see, there are two types of approach in portfolio management. This is the portfolio management only. One is your goal approach that we learn, and another is composite approach. This is composite approach. Composite approach is actually managing composite portfolio is very, very difficult. Okay, because composite approach means what? So you do not put in so you put the goals, but you manage it as a whole, and you manage it in such a way that all the goals are met. Okay, so this is the very, very difficult. Only very highly qualified people, portfolio managers, should do that. For people like you and me, it is always good. We go goal based. इस गोल के लिए ये है, इस गोल के लिए ये है, इस गोल के लिए ये है, and like you will feel so stress free. जो बहुत ज़्यादा risky है, जिसमें you do not want to take risk, might be your child's education and all, वहाँ थोड़ा सा कम risk ले लीजिए. और इसमें suppose ना बहुत सारा ऐसा है, suppose आपको एक luxury car खरीदना है, इसमें आप लगाए ना, आप small cap में लगा के रखिए, ठीक है, डूब जाएगा तो डूब जाएगा. I will buy another car, smaller car. Understood? So it depends on your goal. Goal based means you go by goal based, then it will be much more easier for you to manage. Okay. Or एक पूरा you need to consolidate it, complete consolidation.
Now I am thinking actually, let me finalize the goal, and accordingly I just this retirement plan also I'll have to finalize that one. And
Yes.
based on that, I'll have to, because now I am interested to go for direct mutual funds. So I
Exactly.
think for that actually, because the knowledge whatever I have till now I have gained, so that I
Yeah.
should utilize in the direct mutual funds. I
Exactly.
think that I'll have to create another this coin or something, this grow and all those things. I can create another actually this account and invest directly there. So
Beautiful.
gradually this I will stop it and I will transfer all the funds there.
Exactly.
So yes, thank you. Thank
Got
you
it.
very much.
You're welcome. Yeah. Can you just stop sharing?
Yeah.
Okay. Okay. So now who is next? Just a moment. Huh? Who's next? Yeah, Praveen. Mr. Praveen. Mr. Praveen, are you there?
Sir, I am.
Yeah. Can you switch on your this thing? Yes, sir. Just a moment. Let me take you inside. Okay, just a moment. I think just a moment. Okay, somebody asked some question. Sunil. Sunil, you are there, Sunil? I was late today.
Yes, yes. I mean,
Okay, so you will get that tomorrow. You will just request Poonam in your group that no, I need the recording. You will get the recording. Okay, don't worry.
okay. Thank you.
Okay. Yeah, can you switch off, Sunil? Can you switch off your this thing? Okay, beautiful. Okay. Yes, sir. Yeah, Praveen ji. Bataiye, sir.
Good evening, sir. Actually, the reason why I raised the hand is that there's a LIC fund which just got matured in the last week. So there is an amount of around 5.5 lakhs which I got matured amount. So I have analyzed and found two mutual funds. One is Quant Infrastructure and the other one is Quant Tax. Yes, that one. Both are giving, as per the last 3 years record and everything, it looks obviously a good one. And also the risk factor also, it's that is showing above 50. Alpha ratio is above 15, and all both are showing 5-star categories. So
Both are 5-star. Both are 5-star.
Both are 5-star.
Okay, now why you are going for infra?
So that's what I just wanted to ask you, because that I just sorted out. So before jumping into something, I thought might as well take a advice from you and go ahead.
Okay. Okay. Now, okay. So now, so you need for tax purposes, you need to.
No, it's not. I have no issues for the tax purpose, because these are the two ones which I saw in the market giving good returns at the moment. And one is of alpha value 19.74, and the other one is 17.59.
No, don't go by that, because of history ho gaya. Wo to history ho gaya.
Okay.
Now, so you have put it is a. Are you going to buy this fund for some goals, specific goals?
Actually, specific goals in down the line around after 5 or 6 years, I'm planning to construct a home in my native. So I think it is. So if I start something right now, a better one. So obviously by the time around 5 to 6 years time, that will be a better.
Okay. One. Okay. Okay. Got it. So now, so this goal is. So you want to go aggressive or you want to go conservative?
I think I have to go aggressive.
Okay, you'll have to go aggressive. Okay, if you go and you have 5 years, right? 5 years in your hand. Okay, 5 years in your hand, you want to go aggressive. Aggressive means suppose I don't know what percentage of loss you are ready to take if loss happens.
Loss happens with worst to worst around 4%.
4%. Okay. So now you have done the workshop. Have you done the workshop?
Yeah, that already done.
You have done the workshop, right?
Yeah.
So now you see 4% is this is not a this thing. Okay, this is a 4%. Any one day 4% can be wiped out in one day. Right. So now since you have only 5 years, so 5 years is not very long here for equity investment. Okay. So now that way, so only if you have a tolerance of only 4%, so मुझे जो लग रहा है, so I feel like you can go for debt fund, or you can go for index fund at the most. इंडेक्स फंड में भी सपोज पी कम्स डाउन तो फिर जाएगा ना,
Yeah.
तो वो तो जाएगा ही. Now are you ready to take that risk? Suppose चला गया, suppose it has come down to say 15p or 18p. So are you ready to take that risk? So 20 से 15p चला गया कितना? 5%. Sorry, 5. 5 upon 20. 5 upon 20 means कितना? 25%. At least 20% तो जा सकता है. धीरे धीरे करके, एक दिन में तो नहीं जाएगा. It can go. Possibility तो है ना.
If I will be a risk factor.
So in that case, better you go for a debt fund because 5 years. Okay, क्या 5 years में एक cycle complete नहीं होगा, नहीं भी हो सकता है, right? So when it's a 10 years, 20 years, you know you'll get a cycle. सबसे ज़्यादा, the highest money happens we can make if you follow our SOP, our knowledge, our methodology. When one cycle will be complete, ना, like बहुत ज़्यादा पैसा आ जाता है. Because we'll be playing, right? यहाँ conservative हो गया या aggressive हो गया. When it goes up, like it will give you 40-50% return, 30%, 40% return. Again, like everybody will be losing. We will be investing like for 5%, 6% debt fund. Okay, that's fine. ठीक है, ऐसा बहुत ज़्यादा हो जाता है. But since your horizon is less, 5 years only, तो मुझे तो लग रहा है it's a better thing is that you can go for, you will get some. I think in last workshop we found one good debt fund giving 8% return on something. I cannot remember exactly because you can keep on doing things. So there is one debt fund I found, 5-star fund, giving somewhere around 7-8% return. So I think you can put it there.
But as we discussed the other day, because in the class actually, that time you said that when this thing is going down, that time you can switch over from this one to index or whatever the fund.
That is true.
So can we do something of that kind?
You can do, but at the same time, that's why this time I'm asking specifically. Suppose if the market goes up, the market goes up, like those who are having short-term, what is called small cap fund, they will be getting maximum. Okay, right? Because इसमें ये नहीं ना, अरे उत्पल ने बोल रहा था कि large cap में मेरे को सिर्फ 10% मिला, small cap में मिलेगा ही. But a small cap is at the same level. If it comes down, small cap will wipe out everything. Okay? Large cap will not do that. Okay? You can play that, but for playing that, you must be prepared if it comes down. So there will be losses. Now, are you okay with that loss? If you're okay with that, because only 5 years there. Had there been 10, 15 years to me, then I would have said, okay, go with the SOP. Since there is only 5 years, and you said you can at the most you can lose 4%. Equity में तो होने वाला नहीं है. इससे ज्यादा होगा, right? Getting it? Or you want to play that with that, and then if your investment horizon is long, then you can go ahead definitely. Then strictly follow our SOP definitely.
But what about fund also? I found one more fund called Fund Focus. It's large cap.
Large cap fund focus. That is also the same way. You see, characteristics are the same. Whatever you are, ultimately market comes down, everything will come down. Okay, market goes up, everything will go up. Okay. So that's only thing is that
the coming down may not happen that drastically, no? It may go step by step. By the time
nobody. You see, in fact, despite knowing, I can still remember I was pretty young, and it was Warren Buffett said, derivative is the weapon of mass destruction. And at that point of time, I was a derivative analyst. I am India's first derivative analyst. I used to work with Dr. L.C. Gupta, who introduced derivatives, and then I was recruited by Business Standard because I had knowledge of derivatives, and I started writing reports on derivatives. Okay, so I am the first derivative analyst. Now I was very offended when Warren Buffett said that. Okay, so but the thing is that it was so foolish of me. So now I really feel ashamed that I made this comment. Okay, I made a comment. I wrote a report also. Then after that, what happened? 2007, 2008, everybody knows, right? And entire world came down. That's for derivatives only. But it was the derivatives that I didn't understand at that point of time. I was not CFA. I did my MBA, and after that went there. Okay, when I did CFA later, then I could understand all this debt derivatives. Debt derivatives is much more. It's a much more complex, much more much more volatile. It can be, right? So debt derivatives. Now it is like that. Warren Buffett, he knew that market will crash, but still he couldn't save it, right? So who are you and me? We are nobody. Only thing is that he knew it beforehand. Okay, so yeah, others didn't know. But despite knowing beforehand, he couldn't save his portfolio. His portfolio came down because nobody is above market. Always remember that. Those who are thinking, those who say like we can control market, they're all foolish. We cannot control market. We can surf market.
Yes.
Okay. Market comes down, we know kya karna hai. Market goes up, we know kya karna hai. Most of the people do not know that. And a lot of idiots, they think they can control market. Warren Buffett cannot control market. Who are you? We are nobody. Okay.
Really, at the same time, also for the second call, I planned for a SIP.
Okay.
So investing on any of these fund as a SIP with initial investment of 1 lakh and a monthly certain amount, is it advisable?
Of course, it is advisable, but it depends on your risk tolerance and your purpose. If you are doing it for a longer period of time, definitely you should go ahead.
Yeah.
Okay. But so since you are doing it only for 5 years for your that project, for 5 years for that project, and if that project is very, very important for you, then you should not put your money in that equities.
Okay.
Okay, very simple. You know it already, right?
Right. But still, gambling sort of thing.
Now, if you are putting in equity, like if then you see what is when you depend on your luck, then it is called gambling actually.
Yes.
If there is if it goes up, then I'll make a lot of money. Yeah, that is true. Everybody knows it, but that is a gambling. But when you are playing strategically, that is real management. Investment management is and you're playing strategically.
And also, one of these found there is no exit load as such, which I just checked. There is no exit load for that one.
But I think quant focus may be exit load nahi. Quant focus mein na.
Quant focus exit load is not there.
Exit load
and context is also exit load is not there. But if suppose, for example, I'm not saying that I'm going to start or something like that, but if suppose if I start initially and down the line I may smell something is going to happen or something, I can even redeem that one also because there is no exit load as such. And, so that one, do you suggest for that?
Yeah, definitely. Because if there are two funds, both are 5-star, both are having good alpha, right? Then after that, something that doesn't have exit load, you must go for it, definitely. Otherwise, during the time of exit, you'll have to pay. Na? So, 1-2% chala jayega. Right? So at least those where your investment is 1 year or less. 1 year above 1 year, beyond 1 year, nobody will charge exit load.
But here also there is no exit load as such, even if you are exiting before 1 year also. But even if something is going to happen, something like that, I can redeem it at the moment. So that means that part I will be safe, no?
Of course, that's true.
I can take a call of that kind, no? So for example, if I make a profit of at least 20-22% regularly, and suddenly when I smell something is going to come at me, so that I just redeem it and just put it somewhere else and just keep the liquid cash. That will be much better.
Definitely, that you can do.
Okay. So
okay.
Yeah.
Right, be careful, okay? So you know it, right? Main thing is that you know it.
Because I am a beginner, so I thought, since the reason why I joined this course is that without knowing anything, you should not play around with all this stuff. So when there is somebody who can guide us, obviously it's better to ask before doing something.
That's why we are here, right? That's why we are meeting every week. Okay.
All right, sir. Thank you so much. Thanks for your advice. All right.
Okay. Thank you. Bye. Okay, Mr. Alam.
Hi, sir.
Hello.
Good
Can
evening.
you switch on your good evening? Can you switch on your camera?
Yeah, sure, sir. 1 minute.
Yeah, I am taking you in. Yes, sir.
Yeah, thank you. Thank you, sir, for joining with you, and very glad to see you. Okay, and sir, I really enjoyed your course. 2 weeks back I joined your course, and I watched a couple of videos, not cover all the one, and due to some work schedule is bit tight, so I am not gone through properly. Okay, So apart from that, I have a not much more financial knowledge till now. Okay, so based on that, we are having. I thought like better to have a discourse and understand what you said and go accordingly what you suggest. Okay, sir. So I have a not more question. I have only 2-3 questions I have. So in initial level, when there is a very first one, CPC one, right? So in that one, I have a very might be you think that this what I asked the question you is like whether the SIP is a good one or lump sum is a good one, and that is the first question I have. And the second question I have is like I purchased a new car, okay, sir. So 50% down payment and 15% on EMI. Okay, so I want to make it cover the EMI with whatever they invested for the for 5 years. Okay, so because why I'm thinking this one, because one of my friends suggests me to make it whatever the EMI you are going to pay for the car, better to have at least put some more amount and think this is a EMI only for that one. Okay, so suppose what if it is 8,000 EMI per month, so I want to think better to make it at a 10,000. Okay, 2,000 extra and keep it in a single means different account. Okay, different mode of SIPs and all. And my third question and the last question for now is like which one is the because I go through the course, you suggested debt fund is a good one in for as compared to equity, right? So
not like that, but anyway, yeah, you go, please go
yeah,
ahead.
but if you go if you think for your if you think like for more duration, like 10 or 15 years or 20 years, so then equity will be benefited me. So for debt and all, anyway, that is that I have a question, sir, for now for you.
Okay, fine. So first of all, of course, now I have forgotten already, like, what sort of 1, 2, 3, I'll ask you again. Okay.
Yeah,
so
sure.
First of all, like, let me tell you. So since you have joined without any knowledge, that is the best thing you have done, right? So because now you will learn everything the correct way. Problem happens when people join with knowledge and wrong knowledge, not with knowledge, wrong knowledge. So for them, it becomes very difficult to unlearn the things, right? So for you, it is a this decision you have taken, and you are in a proper place because you have no knowledge at all. Okay, this is the first thing. Second thing is that the first thing you asked me like about what is the first
SIP and lump sum.
SIP and lump sum. Now you see. So now if I say that lump sum is good, okay, so is it going to change any decision of yours? If I say lump sum is good, SIP is bad. If I say that, is it going to change any of your decisions?
Not really, because whatever you shown in that video, no, the very first one. So I'm not come to the conclusion where you gave us some formula to find out what would be the return at the end. Okay, so based on that, I found that lump sum is a good one to make it. Yeah, so it's make it compounding very well instead of SIP. Then I thought it's better to check with you only whether I, because I started SIP and all 6 months back only. Okay, so and my agent, whatever the agent they said, I go accordingly. So I don't know whether, because as is the company, he's dealing with the particular fund only. So so that's why I just want to know from your view whether which one is going to be a good one for me, whether it's yeah.
So now you already know the fact that lump sum is always good. Okay, you know that.
Yeah,
right?
This is my thinking, but you have to
not thinking, you have understood it. That's why it is your
okay.
thinking. Okay, so now this is true, but the issue is, you see, our income comes monthly. So when our income comes monthly, it is not wise that you keep your money under your bed. Okay, so that's why we do SIP. Okay,
Yeah.
Lump sum is good, but I'm not saying that you are getting money and the money is not doing anything and sitting under your pillow, okay, takya ke niche, and one day you do lump sum. This is not going to work because already you miss the time. Main thing is the time. Main thing kya hai? Time hai, theek hai. Abhi kya hai? You have a money, so you have two way you can invest. You have a money, so you can make a lot of people what they do. They small amount they invest.
Okay.
People, those who do not have knowledge, confidence, whether the market is high or low. Okay, so in that case, that's what they do. Small, they keep on investing. Okay, they try to average it. Niche bhi aayega, upar bhi aayega, take a small. That is not a good strategy. Once you understand the market, okay, if the market valuation is proper, you must try to invest as much as possible. Okay, but problem is our income comes in installments. Our income comes in SIP. Okay, systematically our income comes. So since our income comes systematically, even if we want to invest in lump sum, this cannot happen. So we'll have to do SIPs only. Clear?
So suppose, sir, for this one, suppose if I go with the lump sum and the end of the year, okay. So suppose if I open a new account and in that one, whatever the lump sum, if I means SIP every month, if I'm going to pay to the particular fund, better to make it in some account and forget it. At the end of the year, whatever the amount is there, I can invest into that one. Is that a good way? What I think.
Yeah, definitely you can do. You see, like that is irrelevant. Suppose why irrelevant? Because both the funds are giving same return. That is irrelevant. Now what we do, we switch. Once you have you taken a workshop?
No, sir. Not,
you have
not yet. Yeah.
Okay.
Yeah.
Okay. So take it. So now you please complete the course. Then once you complete the course, then you will understand one thing. What happens if the returns are same? So if the returns are suppose this is a mutual fund. This is giving suppose 10% return. Like 10% return it is giving. Now after that, no. You have made some money, like you are making SIPs, and you have made some money, couple of lakhs you have made, right? So now if you switch to another fund that is also giving suppose 12% return or whatever, 10% return, whatever, exactly like the previous fund, then there is no point. Whether you are in this fund or that fund, ultimately you are getting the same return only.
Okay.
Understood? So now this is but if you have got now a lot of people, what they do, they get a lot of lump sum money. Suppose they have sold some investment, sold some properties and all. Now the money comes in lump sum. Now what they do, this lump sum amount, they put it in like small investments, and every month they keep on putting it for so many years. Okay, that is a very bad strategy. That is not a good strategy.
Okay.
Got it? But when you have got lump sum money, then you should invest it. Immediately you should invest it. But you must understand the market. As we have discussed today, PE, etc., etc. Please go through that part. You must go through that entire course, right? Particularly that PE, debt valuation, equity valuation, and mutual funds. These three things you must be thorough.
What are all these three things, sir? So what are all these three things?
That one is that equity optimization, debt optimization, ये bonus में है, और another is mutual fund. Mutual fund में main course में है. All of this में. ये तीन thoroughly you must be very thorough with these three minimum at least.
Okay.
बाकी में भी all other everything is important, right? Everything is important. But these three, to choose mutual fund, these three things: equity optimization, debt optimization, and mutual fund. These three are crucial.
Okay.
Please go through them thoroughly, then you'll understand it. Okay, whatever questions you are asking, so all the questions you will get the answer there itself.
Okay. Okay. So yeah. For first question you answered me, sir, and the second question, what I asked you, that one means we purchased one car, and I made a down payment of 50%. Okay.
Got it. No, I can remember.
Yeah,
so whether you see, okay, you see, pehla galti to hai. First thing is that you should not buy anything on loan. As far as possible.
Yeah, I understood, sir. Yeah.
So like I never buy anything. I used to buy earlier. Okay. I to like I never buy. I bought a car like I paid cash, right?
Okay.
So full paid cash. Okay. But somebody was telling me if you take loan, you will be able to get like much bigger SUV. Right? I don't want. Right?
Yeah, yeah, sir. So that's what. Yeah.
Okay. So this is first thing. Now why I am saying now you are saying okay 8,000 I am paying EMI, 2,000 I am investing in SIPs, right? So anyway you will have to invest. Okay, so this is like what will you do? So that's why like, if you complete the course, then you will see this question is actually this question have no base.
Okay.
So once you finish that course, you will understand yourself this question has no base. Okay, it doesn't work like that. Okay, it works like in a completely. Okay, whatever has happened. Now it is everything is goal based. What is your goal? If your goal is to get rid of this loan early, okay, so then there is a goal. You'll have to set a goal. So this you will understand it once you complete it. Goal planning, everything you will understand. And also at the end, you will get an Excel sheet where you can create your goal. But do not download Excel sheet now. You will mess it up. You will not understand anything. You will get confused. Go step by step. Okay, you will understand it. Okay. So now then itself. Okay. So suppose I have this much of loan. So after 5 years, suppose the loan is for how many years?
5 years. Sir.
5 years. Okay. So you say after 3 years, I want to get rid of loan. Get rid of this loan. Okay. So you can set a target. Okay. For this target, 3 years. Okay. You can now once you understand how to calculate it out, future value, you will know after 3 years what will be the value of the loan. You will know that, right? So now, okay, so I need this much of money after 3 years. So now you start investing right now. Such that after 3 years, you can repay the loan, right? So it's a parallel thing, right? And it must be calculated scientifically. Okay, not that haphazard way. Okay, 8,000 yahan dalo, 2,000 wahan dalo. No, it's not like that.
Because of one of my friend is doing so, that's why I thought.
He is doing good, but he is doing a very haphazard, non-professional way, amateur way. Okay, you should not do like that. Since you have joined this course, so you should be like, with proper calculation. Why 2,000? Why not 3,000? Why not 1,000?
Yeah, exactly.
So like that answer you will get when you do the proper planning. When you do the proper planning, you will exactly know. It might be 1,500. It might be 800 rupees also. Okay. So this is how it is.
Okay.
Okay. So second question.
Yeah. Answered. Yeah.
You will be able to answer yourself. Okay. And otherwise, I am already there. Okay. But you'll have to finish it. After that only I'll be able to help you out. So then now today, if I show you all the calculations, and you will not understand it. So there is no point. All right.
Okay. And one last question is debt and equity, right? So, sir, equity, if I am having invested some in SIP, okay, so I am maintaining some portfolio. So in that one, the return which I looking for past 6 months is only 7 to 8% in between. Okay, so because of that, company agent came and insist me to invest you in this fund only. So based on his input, I invested in that fund. So whether for this session I can't show you. In the next session, definitely I will show you whether I am having in a right track or better to switch to some other fund, because initially when I go through your video, so you mostly insist on to do whatever you are doing, do in a debt fund rather than equity fund.
No, it is not like that. No, it is not like that, because you have that feeling. Probably you have not gone through that entire course. So it is never like that. It is never like that. Okay. Always equities are good, provided you have knowledge. But if somebody doesn't have knowledge, then debt fund is good. Okay. And you have come here, join here to have knowledge. Right. So when you have knowledge, proper knowledge, you need to understand that. Otherwise, you will not be able to understand how to switch from one fund to another, right? Today we have discussed, like you must have seen, we have seen some portfolios and all, and they themselves can understand, okay, these are the wrong investment decisions. Okay, so they could understand that because they have gone through the course, they have understood it. So you will also understand it. Don't worry, you will also understand it. Okay, but you'll have to finish that course. Please finish that course. After that, you will understand it. Then after that, whatever fine tuning needs to be done, that will do it here. Don't worry.
Okay. Yep. Yeah. Thank you so much.
You have seen, today, all these guys, they're so expert way they were asking questions, right? And they could answer themselves, right? So because they have finished that course.
Okay. Yeah. Okay, sir.
And
Sure.
if possible, please do workshop. Workshop is a very shortcut actually. When did you join? Alam, when did you join?
15th day back, 2 weeks back, sir.
Okay, 2 weeks.
2 weeks ago. Yeah.
Okay, start going through the course, right? Start going through the course, and if you have doubt, if you do not have confidence whether you'll be able to finish it or not, then it's better you do workshop. Okay, because in the workshop, I will give you the gist of that course I will give you. So it will be a shortcut.
Okay.
But if you're really, I found one guy, so I told him, okay, you don't have to do workshop. So he asked me, because he is so sincere and he knows it's and everything. When I was discussing, so he knew everything. Okay. So I told him, okay, you don't have to do workshop because you yourself have already got the thing, understood the thing. He was also he had no idea about any investments or anything. Yeah. Tell me.
Okay. When it will happen, sir?
Workshop will happen this Saturday and Sunday, 6 to 10. 6
this
to
Saturday.
10. Yes.
Okay. What is the timing?
6 to 10.
6 to 10. Okay.
Both the days 6 to 10, 6 to 10. In between, we take half an hour break.
So it's a monthly one or a monthly?
It's a monthly one. Yes. It's a
monthly one. Okay. Okay. Thank you, sir. Thank you.
Okay.
Yeah. Thank you. Yeah. Thanks.
Okay. Yeah, Koteswara. SOP means, Mr. Koteswara, SOP is, हम लोगों ने जो discuss किया था ना, वही SOP है basically. SOP means standard operating procedure. Standard operating procedure हम लोगों ने जो discuss किया था कि P इतने में हम लोग को इसमें invest करना चाहिए. Suppose 20 P में we must go for large cap or index. ठीक है, थोड़ा सा ऊपर चला गया तो large cap से we should go for index. इससे भी ऊपर चला गया then we should go to debt fund. So that is an SOP only. We SOP का बात कर रहा हूँ. And if it comes down, then how we move from mid cap. Then after, if it comes down further or नीचे चला गया, so we go to small cap. Okay. So this is the SOP. So, standard operating procedure means कैसे choose करना है. ठीक है? Koteswara Rao, understood? Clear? Okay. Okay. Yeah, Ganeshan. Ganeshan, are you there, Mr. Ganeshan? Shanmugam Ganeshan. Shanmugam Ganeshan, can you switch on your this thing? Unmute yourself. Shanmugam Ganesham, are you? I think he has gone somewhere. Chit funds are good or bad? You have done the Abdul Kader, you have done the workshop. Have you done the workshop? Yeah, Gaurav, I am coming to you. Just a moment. Huh? No, right? So you have taken workshop, Abdul Kader. You have taken workshop. Have you taken workshop? Okay, so now please finish that course. You will understand. Okay. So in chit fund, okay, nowhere we discuss chit fund. Nowhere we discuss chit fund. Chit fund is very unorganized, but let me tell you, a lot of people, they want to experiment with money. Now this is okay, provided you finish your goal setting part, right? So now, as I told you, those who joined me earlier, of course, new students, we have been thinking about starting one course on equity. So why I am not starting it? Because I am skeptical that you will start gambling. Okay. So, and you see, my purpose is everybody should, whatever is the best based on our income and all, everybody's basic goal planning should be there in the place. After that, okay, once your goals are set, everything is set, still you have a lot of discretionary income, discretionary expenses, right? So this happens, right? And in the when workshop also we find sometimes, right? With a lot of discretionary expenses. So you can really, but instead of blowing it away everywhere, right, going to pubs and all, so what we can do, we can take risk with that. So only that money you should invest in like chit funds or equities or derivatives also if you really want to do very aggressive. But you should not sacrifice your plans, goal plans. Okay, what about the goals, right? So this course is the first. If you have surplus money after doing everything that we have discussed in this particular course, even after that, if you have surplus money, that surplus money you can have fun, you can invest in everywhere. Okay, but until and unless you have surplus money after planning all the goals, you must not go for, you should not go for anything else. Okay, so that's why, like, we are deciding inside, so we must allow only those students to take our equity course who have completed their goal planning. After goal planning, if somebody has surplus money, lot of discretionary income, discretionary expenses, only they will be allowed to take. Of course, I cannot go and I can check it, right? But at least I'll ask those who are having surplus after completing the goal, only they will be allowed to take the equity course. That's what we have decided. Because I was really like, I don't want you guys to gamble with your money. Okay, full stop. Right? Okay. Yeah, Ganeshan, are you there? Ganeshan, are you there? Gaurav. Yeah, you can come in. Gaurav, you can come in. Ganeshan is not there, I believe. Yes.
Hello, sir.
Gaurav.
Good evening.
Yeah, good evening.
Good evening. Okay, so this is my first session actually. Today I just joined. Yes, though I was a bit late to join, so I'm not sure if initially the discussion maybe I had sort of missed around half an hour.
You will get the this thing. You will get the videos. Don't worry.
Okay. Okay. So just like getting a hang of it. I know there was like a lot of sort of technical discussions, and I was just getting my head around very initial phase. So
you are in the right place at the right moment, actually. Since you are thinking it's very technical, that means you are in a proper place.
Yeah, starting from the scratch.
When people come with half knowledge, that becomes very, very difficult.
And basically, like, good part is just getting it from the scratch, because the reason for me coming in over here is I have been sort of investing some amount in mutual funds, sort of created a demat account in Grow and investing it there, and otherwise for ATC deduction, whatever is required in PPF and tier 1 NPS. Those are pretty much standard. But the rest, what I do, that I never able to understand, or I never get the confidence that do I buy this stock or not. And once I bought it after just the COVID dip on 13 March 2020, but then I got panicked, and then after some time took out that money. So all that, like, I thought that there is no point of like going back and forth on this. So that is why I thought that this can be the best place to come and have that knowledge. So that is what brings me here. Just, sir, I wanted to understand. So this Monday and Saturday and Sunday sessions which we'll have, I know that for the crore planning, it was like the first 4 sessions which is there, which was and I see that it is there in the list also here. So we need to complete that. And to be very honest, I couldn't complete that, even sort of I was too busy with office work and I was traveling. So I plan to complete it.
Please at least complete this 4.
Yeah.
Okay, because without completing this basic 4, that 99 rupees, right?
Yeah. 99 rupees.
Yeah. So this without if you do not complete it, then you will find it very difficult. We will be discussing bond. We'll be discussing bond calculations and all. So you will not be able to. You have got you will get a lot of doubts. In fact.
Okay.
So at least this 3, 4, and it's very easy. Very easy. There are one formula. In fact, we have discussed. There are 4 sessions, 3 sessions, at least 3 sessions. 4, even if you do not do 4, it's okay. You can leave 4. Let me tell you very frankly, because since you have joined this course, 4 you will understand in much better way. Okay, that you'll understand the workshop. But this 1, 2, 3, this 1, 2, 3 is the basic. That fundamental 5 elements. You must have thorough knowledge about that.
Got it.
At least this 1, 2, 3 you finish.
Absolutely. I'll get that done. For Saturday, I'll get that done. Anything else that needs to be preparatory, or those 3 or 4?
No.
That is
Baki
fine.
to baki mera kaam hai.
Okay.
Okay, and
Okay.
Since you have just joined, don't get disappointed, because those people who have already joined, they've already seen some of the videos, or some of them have already completed the videos. Okay, after that they will be coming. Okay, so for them it will be wow. Okay, so for you it may not be wow, because you have just joined. Okay, still you are getting yet to acclimatized, right? So suddenly you are going to do the workshop, so don't worry.
Sure.
Okay. So,
And sir, one other
thing,
thing, I'll get that. And one other thing is it every Saturday, Sunday, or how is it like?
No, this workshop happens once in a month.
Okay.
Workshop happens once in a month, and those who have taken workshop, only they can access it. Okay.
Okay.
So because of there, I don't know when you joined, because earlier, workshop was compulsory. Okay. But as I said, there are a lot of people, they requested us to reduce the price, so we need just videos and all. Okay, so many months, we are avoiding that. But later, I thought, okay, fine, okay. Somebody wants to say, that they can afford only only the videos, and they're happy with that. So we have created, bifurcated videos and workshops separate.
Okay, so it is like on the last week of the month, is it like that? It happens
like normally last week in the month. Yes,
okay.
Last week of the month, last Saturday, Sunday, both Saturday and Sunday should be in the same month.
Okay,
normally it is, most of the time it comes, I think as of now, so far it comes fourth Saturday and subsequent Sunday.
Okay.
But Sunday also should come in the same month only, so that is necessary.
Okay, got it. It doesn't move over to the next one.
Yeah, it should not be one. Okay, ek tarikh nahi hona chahiye.
Okay, yeah, that helps then. Sure. Okay, that sort of gives me an idea. And if there is any other questions, I think Poonam is a name who is, I think, coordinating on the chat.
Poonam, she is the coordinator. She has a course coordinator. Okay,
I'll sort of reach out to her and get information. Yeah, thank you, sir.
Okay. Ganeshan, are you there? Ganeshan, I think Ganeshan, he raised the hand and has gone somewhere. Ganeshan, are you there? Ganeshan. Sanmugham Ganeshan. Many people come after you. I think he's not there. Okay. Anyway, guys, so I think since he's not there, so we'll have to stop here. And next week, not next week, Saturday, Sunday, get ready. Okay. Fasten your seatbelt. So it is going to be a long marathon, and don't worry, you will not even realize that time has gone. Only thing is that your brother may disturb you in between. Okay, but otherwise you will not realize. Okay. Okay. Now, okay. Vijay Bhaskar. Yeah, Vijay Bhaskar. Yeah. Can you switch on your switch on your video?
Yes.
Yes, sir. Okay. Okay. Yeah.
I think my video is visible to everyone.
Yeah. We can see you.
So actually, I have one question. So I have invested 1.5 lakhs 2 years before in sovereign gold bond. Okay. But unfortunately, when it was very peak time, so I invested. So currently, that amount is 1,40,000. 10,000 is the minus one. Whether it is at 8 years bond, so 2028 only I can close that actually. Suppose if I want. But whether is it okay to close right now, because that interest is very 2.5%. 6 months once they are providing 2.5% interest. Whether I can close that amount and I can switch over to mutual fund, and this is what is your advice, sir?
Okay, so now when did you join this course?
I joined last month. I attended the workshop also, first 2 workshops.
Okay, so now once somebody does my workshop, he becomes master. Now let me ask you, what do you advise to me if I ask you the same question?
I would like to close and invest into a mutual fund.
You know it.
The only thing is, It's just I want to get your advice also. That's the reason I.
That is my
introduced myself.
advice. That is my
Yeah,
advice. Okay.
Yeah. Thank you. Thank you. Thanks a lot.
Okay, welcome. Yeah. Okay, guys. Okay, so see you on Saturday and Sunday. Do not miss it, please. Those who have taken a workshop, do not miss it. Those who have not taken workshop, if possible, I think, and I don't know what is the price. I cannot remember. I think 3,000 rupees or something. Okay, it's worth paying that money and attending the workshop. And of course, yeah, I do not think like I'm just pushing you, because that will be a breach. Like some as I told there are a few. I got one very young guy. So I told him myself, okay, you don't have to attend the workshop, because he's so sincere. He's so sincere, he finished everything. So that is the expectation, right? So if you are 100% sure they're going to finish it properly and with a lot of dedication, then you don't have to. But if you have doubt that you don't know whether you'll be able to finish that course, go through all the videos. The shortcut is attending the workshop. Okay. And those who have taken the workshop, please do not miss it. Please do not miss it. If you miss it, that means you have postponed it for another 1 month. Don't do that. Everybody, please attend the workshop. Those who have already taken the workshop. Okay. Never ever miss it. And we do not, we have a recorded version, or it's an old version. We do not record workshop. We have a one old recorded workshop, so that we share only something. If something happens, some serious something happens, then only we share it personally. Okay. So please be there, because it is something you should present. You should be present there. Okay. So it's very interactive. Okay. Bye bye, guys. See you this Saturday, Sunday, and next Wednesday. Bye.